Hi, I'm Mike with Let's Talk Building, and today we attended a seminar sponsored by Raymond CPA and Consultants. And we addressed a lot of hot topics in the construction industry today. And with me, I have two CPAs that were presenters, Matt Grigsby and Janine Havoc. We're going to ask them to summarize a couple of the more important points that we heard today. Matt, when we talked earlier today, we learned a little bit about both commercial and residential issues relative to tax issues. One of the hot topics over the last year or so has been green building, which is popular. But tell me about energy and what energy incentives are available for either the property owner or builder in a commercial application or residential.
Okay. Well, currently there's some credits available for energy efficient improvements. That could be in the case of residential, things like doors and windows and insulation. There's a 30% credit out there. Unfortunately, that does expire this year, but there's hope that that will be extended. In the context of commercial buildings, there are credits out there for things like solar, geothermal, and other energy-related improvements. Those credits are even available for homes as well. One of the big things that's out there that hasn't really been taken advantage of is the Section 179D deduction. It's not a credit, but a deduction. You can get, though, $1.80 per square foot maximum for the cost of upgrades to lighting, heating and hot water systems, and the building envelope itself. One of the really neat things about this deduction is in the context of governmental buildings. Since governments don't pay tax, obviously, the Congress has allowed this deduction to be passed through to the designer of the building. So that could be an architect, an engineer, an energy consultant, whoever contributed to the design of these types of improvements. They then can take this deduction. It's no cost to them. They obviously didn't pay for the improvements, but the deduction becomes theirs. So that's a deduction, unfortunately, that there's not been a lot of publicity about, and I think a lot of contractors, engineers, architects aren't aware of it, and it's something to definitely look into if you're involved in any construction of governmental buildings.
Great. Thanks, Matt. Janine, since the seminar today took place in Michigan, and Michigan's experienced probably its share of the bad economy, it's not uncommon where some contractors and builders might go to work in other states, border towns such. What are some of the tax implications of doing work in these border states?
Well, I think you need to be aware of what the nexus requirements are in those various states, and they're going to differ by state. Some like Michigan, if you come into Michigan for one day, that creates nexus in this state. So you'd be subject to the Michigan income tax if you were an out-of-state taxpayer. The nice thing about it being one day for Michigan taxpayers is that if you go into Indiana for a day or Ohio for a day, then you can apportion your gross receipts for the services that you performed in those states out of the state of Michigan for those things. Other things you need to be aware of, though, since you are going into these other states, you need to be aware of what their nexus requirements are, when you're going to have to file an income tax return in those states, what's their workers' comp issues, if you need to pay unemployment taxes in those states, if you use employees in those states, if you are the contractor. There are reciprocity agreements with a number of the border states, so you may be okay as far as withholding taxes go, but you really need to be aware of what the income tax rules are in each of those states.
Okay, thanks. And for our Michigan audience, Janine, what are some of the issues with the Michigan business tax that construction companies should be aware of?
Well, during the presentation today, I kind of gave a brief overview of the Michigan business tax, and there's two parts to the tax. There's a gross receipts tax and an income tax. And when you're figuring the gross receipts tax, you take your gross receipts and then you subtract out purchases from other firms. And those purchases from other firms are your inventory purchases, depreciable asset purchases, and materials and supplies. And I kind of touched a lot on what are considered materials and supplies for this deduction. Some things you need to be aware of. These supplies, materials and supplies need to be related to either a depreciable asset or inventory. So in cases where you're purchasing tools throughout the year, those tools, if they're small tools like a hammer or a screwdriver, you're not going to capitalize those assets, so those are not going to be considered a material and supply for purchases from other firms. If you've got a fixed asset like a vehicle that the company owns and you're purchasing fuel and repair parts are also considered a material and supply. So as long as that fuel is for a company-owned vehicle, then you can take that as a deduction. But if you've got employees who are using their own vehicles and they're going back and forth between jobs and you're reimbursing them for those fuel costs, then that fuel cost is not going to be a deduction for the company. Also, when you're considering repair parts, the state of Michigan has an FAQ out on their website now in regards to the repair parts. If you're going to purchase a repair part for your vehicle, say you need to replace the alternator in a truck, you purchase the alternator yourself, then that's considered a repair part, and you can take that as a deduction. If you take your truck into a dealership or a repair shop for them to replace the alternator, then the alternator is incidental to the service, and it's not going to be considered a part for a deduction.
It's good information, thanks. Matt, one last thing. For residential, are there incentives that property owners can take advantage of?
Beyond currently the credits that are out there for the energy efficient property, there's not a lot to take advantage of. On the commercial side, there's more incentives though, particularly when it comes to tax depreciation. There's some newly enacted provisions or expanded provisions, I guess you could say, with regard to expensing the cost of certain assets. The Section 179 deduction, for example, that's been increased for both 2010 and 2011 to $500,000 that you can deduct of equipment or personal property assets that you buy. Another thing that commercial property owners can take advantage of is something called cost segregation, where you analyze the construction of a building, break its components down, and get as much into a personal property classification for income tax purposes, not for state law property tax purposes, but for income tax purposes to treat things as personal property, which then makes them eligible for a 5 or 7 year depreciation life as opposed to a traditional 39-year building life. That process is fairly involved. You need to analyze, as I said, the construction. Typically an engineer or architect is involved in the process to quantify these costs and value them. But at the end of the day, for property owners of both constructed property or even purchase facilities, that can lead to a lot of tax depreciation that you can take up front in those early years, 5 to 7 years, let's say, as opposed to deferring everything and taking it 1/39 per year.
Great, good information. Thanks very much.
You're welcome.
Well, that was great information by Raymond CPA and Consultants. Check out the link and article for their contact information, and that's good business wisdom delivered. I'm Mike with Let's Talk Building.